The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome. I'm Steve Rhodes, host of The Trader's Edge. And, folks, I treasure your presence here today. And my outcome, folks, it is to help you become a better money master. I am absolutely here to inspire you, but mostly, folks, how to lay the groundwork so that you can lead an inspired life. Be a leader out there, folks. You know, I've owned a number of businesses out there, and and I know that we've got a number of business owners that listen in, whether you're listening to us live on the radio, and we absolutely appreciate you doing that. If you are listening on the radio, you can always catch an archive of this show on TigerTV. The archive is on Channel 9. You can watch us live on TigerTV. So if you are near a mobile device like an iPad, an iPhone, a Google phone, Android device, you can watch us live. Even on that, you can go to the homepage of TFNN.com. And over on the right-hand side, you'll see a little area. It's got some red dots around it. And if you click on that, that'll take you to Tiger TV. Go ahead and bookmark it so that we're just one click away, and you'll be able to catch this show live. But and owning a bunch of businesses, and so if you own a bunch of businesses, we're all, the gig economy's coming back slowly but surely. And if you own business and you're hiring folks, what I always used to tell my managers was this. I said, we don't teach our people to be nice. What we do is we just simply hire nice people, because they would say, what were the parameters? How do I choose person A, choosing B, choose, person C, or what have you? Always choose the nice person. And it is nice of you to be here with us, folks. You can always give us a call at 877-927-6648. And if we take a quick look at the markets, after our sledgehammer fell apart yesterday and got crushed, we're going to take a look at that, see what that means, see where the market fell down to. What you can expect today is a bounce in the marketplace. You've already seen it here this morning in the futures. You got the Dow futures up about 60-plus points, ES Mini up 70. Now, folks, you got to put that in a little perspective. You were down yesterday, as you know. Maybe you don't know, the Dow down 250, S&P off 30 points. So off 30 points, up 7 points right now. The bounce is going to be coming in to the 0.618 area. If you take a look at NASDAQ futures, up about 8 points. Russell up about 4. King dollar down 7 cents right now, trading out at 82.41. You've got gold up $2. That's after getting hammered. That sledgehammer apparently was over in gold and silver. And you had gold trading out right now at 15.68. Silver is at 26.81. Light sweet crude up 67 cents, trading out at 78.89. Natural gas up 8 ticks. You've got platinum down $1 and change over in Germany. Now, we're certainly going to take a look at Germany. The DAX right now trading down just 29 points. It's going to try to get positive today. You've got the FTSE down 31 points. You've got the Hang Seng was off 269 points last night. Over in Spain, it's up 146. That's the IBEX. You've got the Shanghai was off 32, and the Nikkei down only 25 points last night, 0.3%. Again, our call number is 877-927-6648. So let's go take a look at our ES mini chart here. We're going to start with our 30-minute chart that we were taking a look at yesterday. What I was showing you was an area of strong support. Well, that area of strong support decided to give way at 11:30 a.m. And at 11:30 a.m., that strong support, if you take a look at that bottom of that hammer, that sledgehammer candle that came in, that was at 1 p.m. on the 30-minute chart out there. That low was 1388.75. As soon as that low was penetrated, it's kind of like, okay, what are we going to do here? And in the 12 o'clock session, tried to get back up inside the back inside the close of Friday, or the high of Friday. Tried to get back inside the hammer, back inside that candle. It didn't, and that's why you really want to understand these candle patterns here, folks, because they are absolutely helpful in understanding when these things crack. It's telling you that you're going to see lower prices. Then it's up to you to figure out, well, where are those lower prices going to go to? Now, when you take a look at where lower prices are going to go to, that's where I want you to be able to use your Fibonacci retracement numbers, your little ruler out there. Because when you do that, what you're looking for is a convergence of numbers to come together. When they come together, what you're going to see is you're going to identify where your strong area of support is going to be on a falling market, on a falling knife. And so if we do that, I'm just simply, I'm going to do that here. You take a look at the smaller chart, but then I'll go ahead to the larger chart, just make it look a little bit easier on your screen here. But when you're taking a look at this smaller chart, what you're looking for is you're looking for those major intersections. So clearly, and when I talk about a major intersection, folks, I'm talking about, major swing points out in the marketplace. Now, major swing point, why I call it a major intersection, because we're so used to driving. We know what it's like to come up to a major intersection. We also know what it's like to pass by all of the other cross streets. Well, a major intersection is where you see in the stock market chart analysis is where you see a significant change in trend. So that most significant one that you're going to look at is down here in the June 3rd time frame inside the ES Mini. The low out there looks like it's about 12.62. I'm not going to worry about being exact to the penny. I'll try to be as close as I can, but with it being so small. Now, the next major intersection on the way up, folks, would be the high that was put in. That high being put in on June 3rd, I believe it was. Let's see, right up here, right about up here. Come on, work for me, mouse. There we go. Got the little mouse working. So that high was put in. No, I apologize. June 19th. And the high out there being 1355. So if you just simply go from that 1357, again, the numbers here are so small. And so if you go from the low of the major intersection up to now the major intersection, which is the high that was established out there, and what you want to make sure that you've got is you want to certainly make sure that you've got your 382, 618, and 786. It's really all that you need. You can put other stuff up there if you want. To me, that's just adding more noise. Well, you'll see that the point 382 area is in the 1320 range. What did the market do? What did the ES Mini do as it was pushing down? What it got down to was a low coming into the 4 o'clock close. Got down to a low of 1317.50, closed at 1319. Now, how is it that it works? How is it that markets are just simply going to go into these areas here, these Fibonacci areas? Does it really matter? I mean, I can just tell you that it exists in that the Fibonacci summation sequence exists out there all over the planet. We're just not aware of it. But what I can tell you is that it absolutely is in these charts here. It helps attract fear and greed, if that's what you want to call it. It certainly is going to give you an idea of where price is moving to. Now, that's on the longer term. If you start taking a look at some of those other numbers, I gave you 0.618. I gave you 1.272 as expansions, 1.618. Well, we can take a look at those as well. So if you take a look at, we've had 2 Sundays, the last 2 Sundays, the world has been waiting with bated breath. How are you going to solve the problems in Spain? How are you going to put out the fire in Greece? And so if you take a look at those 2 areas, here was the first one. Here was the Spanish Armada. And they open on Sunday. You had the ES Mini open up, got up to a high of about 1342, and then continued to sell off, continued to trade down, all the way into the price point, all the way down here. I'll put my cursor on it, all the way down into the 6:30 time frame on June the 11th. So what you're taking a look at on June the 11th, you had, in essence, a pretty major intersection, because you had, people just simply, when I say people, traders, didn't buy into the Spanish fix. They didn't buy into it then. Why would they be buying into it now? But that's a different story. What we want to be able to take a look at is, major crossroads, major intersections. So if we take the low out there, which is in the 1297 range, and I'll do that for you, and you go all the way back up to that high that was established. Let me see if I can get right to the penny here. Close enough. There we go. Right to the high up in June 19th at 1357. And let me see if I can go ahead and change the color on this for you. That might be easier for you for your viewing pleasure. There we go. We got it all nice in black. And so we take a look at this. If we take a look at the 0.618 area, you're seeing that 0.618 coming right in where that 0.382 off of that last major intersection all the way down to the bottom. How is it that those 2 numbers come together? Now, as the market's falling, if you're long and you're trying to understand, okay, where's this thing going to go to? Because there's a lot of folks that trade without stops. Not you. I know not all of you in the listening audience out there, but there are folks that trade without stops, or you're looking to understand where possibly the next line in the sand might be, where it is that you might draw your line in the sand so that you can see, is this a place where you might want to be able to take a trade? Is this a place where you might want to be able to see a bounce? So now you've got two areas that just came together, right? Well, let's go take a look at the third one that comes together. Let's go take a look at the expansion of a swing point. So remember, I said there's 2 Sundays where we've come in where the world is waited with bated breath. How are we going to solve the problems out there? Well, if you take a look at the market, you take a look at the last one. That was the grease fire. The grease fire that was put out Sunday night. Supposedly, you had the ES mini trade up as high as 1347.50. And then what did it do? Continued to sell off until it made its next major intersection. It did that at 10 o'clock in the morning on June 18th when it got down to a low of 1327.25. So let's go take from 1327.25 all the way up to that high again that was put in there at the 1357 mark. What you're going to see here, folks, right here, let me try to blow it up. You're going to see that the 1.272 of that expansion, 1318.94. What did I say? It got down to a low of coming into 4 o'clock? Got down to 1317.50, folks. You want to understand your Fibonacci? 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and I do want to say a special thank you to each and every single one of you out there that ordered the special report that we have featured on the homepage of TFN.com. We got over the B point with a vengeance yesterday. We're trying to just simply get to the 1,000 mark. Got to 1,233, folks. And so, what my outcome is to touch as many people's lives as possible. But especially with regard to this report, it's a method that anyone can use in order to be able to manage their long-term funds, their retirement funds. The way that you trade your retirement funds should absolutely be different than the way that you trade the markets, in a shorter-term basis. And, we're coming up on not this coming week, but the following week, July 4th. So what I'm going to do out there, I'm going to throw this out. I'll do absolutely, as you know, if you know me, you know I always do the best that I can. And then I know that I really haven't done the best I can because I can always do better. I'm always striving to do better out there. And but what I want to be able to do with the July 4th holiday coming, which falls not this coming Wednesday, but the following Wednesday. So what I'm going to do is I'm going to go ahead and tape a show or two, and that can be replayed. So also you'll be able to get it on an archive. And one of the things that I want to be able to feature on there, that I want to focus on there, in a way for me to really say thank you to each of you that actually ordered that report. And please, tell others about it. Send them to the homepage at TFN.com, because everybody needs to be able to have a simple tool, to be able to manage their long-term funds. And so what I'm going to do, if you send me an email, steve@tfnn.com, what I will do during those 2-hour segments, 1 or 2 hour segments, haven't decided exactly what I'm going to do, I will try to cover as many, if not each of them, that you have sent in to me. With regard to now, what I want to do is I want to just keep this to the mutual funds out there. I want to keep this, in essence, to people that are just in their 401k. So don't send me, hey, what's going on with Apple or what's going on with Baidu or Google. That may be a part of your holdings. But I'm really out after the folks that have got 4, 5, 6, 10 different boxes to check. Maybe it's something you're in. You're wondering whether you should be in it. Now, I'm not going to be able to put on my chart. Now, how many of those are out there, folks? Like 8,000. So I'm not going to be able to cover 8,000, in 1 hour. But I'll do as much as I possibly can. We'll make it a first come, first serve. So don't procrastinate. That's not going to accomplish anything. And even if I can't get to the chart, I'll find some way, some tool, some spreadsheet, some way, so that you'll know whether it is a mutual fund that you should be in or one that you should be out of. So again, steve@tfn.com. That is a way for me to be able to thank you for allowing me to touch your life and show you a tool that's out there. Now let's go out west and let's go touch somebody's life who is in Las Vegas. Let's go to Larry in Las Vegas. He listens to us on 920 KKNX. Larry, thanks for calling. Thanks for holding. Thanks for being up so early.
Hey, thanks. Sorry I got to talk to you on the speakerphone. My phone died while I was waiting for it.
We don't even know that you're on the speakerphone. You sound like you're my co-host.
Well, great.
Yeah. Good. Hey, good speakerphone. Maybe you ought to do a commercial for him.
Maybe. I wanted to ask you about IWM. I really like this trade. I went long yesterday.
Okay.
About 76.80.
Okay.
And I trade off the 1 hour, and I use the daily and the weekly.
Okay.
There's a perfect head and shoulders bottom on the hourly, and right around that 76.80, if you look at the daily and the weekly, is a real strong support resistance line. And one other thing I use is the RSI, and the RSI was oversold. So I'm just wondering what you thought of this trade going long, and how about some profit targets?
Well, I'll absolutely give that to you. Now, I've got a tool out here. So my first question is, I'm glad you asked me about the profit targets, but first I'm going to ask you, now are you trading this, off of, I mean, what in essence are you looking at? Are you looking at the hourly? Are you using the hourly to get in, or are you really looking at the daily chart to make your decisions?
No, I use the hourly to make my entrance.
Okay. So my first question to you would be, where's your stop?
It's at 76.20.
76.20. So what I want you to do, do you watch us on Tiger TV?
Yeah, I do.
Okay, great. All right. So I'm going to pop up on the screen here what I think is the most important tool that you need while it is that you're trading, and at least that you need to understand. And this is called my position size calculator. Larry, if you haven't had a chance to try it, go to the homepage of tfnn.com, and on the left-hand side you'll see a carousel, and you will see a little tool there that says position size calculator. You can use it for free for 30 days. There's a video that will teach you how to use it. One of the things that it does for you in anything that you trade, it tells you what your average true range is. In this case here, the average daily volatility is $1.60. So you may be in the right trade right now, but because your stop could be so tight,
right,
you could get knocked out of the trade just because of the normal daily noise. Stay there, and we'll come back, and we'll go right to you after the market's open. All righty. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, my bell. Where's my bell? There we go. And we're off to the races. You got the Dow up 58 points. S&P's up 6. Composite up 11. Small caps up 4. Microsoft down 5 ticks. Intel up 6. Google up $2.71. Apple up $1.48. And we're going out to one of my favorite cities, Las Vegas, to our man Larry, who is in the IWM trade. So trying to help him out here. So Larry, you still there?
Yeah.
Okay, perfect. All right. So before we go into break, what I was taking a look at is just simply a way to be able to understand what the average true range is. And my belief, especially in volatile marketplaces, is that when you place a trade, what you need to do is you need to make sure that you allow just simply for the daily noise, because you can be right in the trade and get knocked out just simply because of the average daily volatility. So just wanted to be able to share that with you. On the IWM, just the daily average noise is $1.60. So it opened up this morning at 77.08. If you just use just the daily noise and you subtracted $1.60 from 77.08, you would need to have your stop down at 75.48, and that just takes care of the daily noise. And in a volatile marketplace, you want to be some method outside of that. Now, I believe that is below the stop that you have in place, so I just wanted to be able to at least share that with you. With regard to where it might head to, what I would be taking a look at is I would be taking a look at the 30-minute chart. So you mentioned that you like to use the hourly chart. What I would suggest that you also throw into your arsenal would be the 30-minute chart. Right. And what's possible is that the IWM, and you are absolutely right. The IWM, take a look at the ES Mini, take a look at the S&P, take a look at the Dow. They're all doing the same thing, meaning that they came back to an area of some strong support yesterday. We're going to see just how strong that support is, but it is a 0.618 of a retracement, which I consider strong support. It's a 1.272 of expansions, as I was covering during the first segment. The IWM, no difference, and so that 76.56 area should be strong support. I just like to be able to not be knocked out of a trade, because of just average daily noise. Where this could head to, where I think that it's going to head to, is in the $80 in change range if this trade works for you. Now, your first area that you're going to have to really pay attention to is going to be right here at the 10 o'clock time frame yesterday. And so on the IWM, the price that you're looking at is 78.05 to 78.53. Should the IWM trade up this morning, you are going to run into some turbulence, just like when you land in Las Vegas in the summertime. That's a little bit turbulent sometimes, isn't it?
Oh, yeah.
Yeah. And even taking off out of there because of that heat and, in those mountains, and the heat that you'll find inside the IWM is going to be at 10 o'clock yesterday. It had 17 million shares. So as you come up into that area, you start coming up there with some lighter volume, just expect to get knocked around a bit. If you can get above that area, meaning you get above 78.53, then the next place where you're going to run into any kind of turbulence is going to be at the 1:30 time frame on the 20th. And that high out there, 79.08. Now, it has 5.4 million shares. If you can get above that 5.4 million shares, coming above that price, so I'm going to give you the harder one to hit out there. So if you get above 79.08 with more than 5 million shares, you'll have on the 30-minute chart a confirmed A to B equals CD up. That would take you to $80.58. Now, I switch over to the daily chart and go take a look and see what do we have on the daily chart. The IWM actually, folks, has a confirmed A to B equals CD up. It's the only one of the ETFs that has a confirmed A to B equals CD up. The B point that I'm using happens to be the high of June 11th. That high, 77.86. You did 52 million shares on that session. 4 trading sessions ago. On Tuesday, you got up above that with 67 million shares. You closed above it. So it has a confirmed A to B equals CD up that should take you into the $80 and change area. So you've got 2 confirming, get you into the $80 mark. But, yesterday with the action that we had, just make sure that you keep a stop in place.
Yeah.
I'm suggesting that your stop might be a little too tight, but you've got to make your own money management decisions.
Well, now that you mentioned it, I did take another look at the chart, and maybe a better place I should have put it at would have been below that right shoulder, which would have been about 74, 75, I think.
Yeah, okay. Yeah. Now, a lot of folks had been, if you took a look at the daily charts on the S&P 500 and so forth, folks have been taking a look at an actual head and shoulder pattern that was out there. That head and shoulder pattern, I don't trade head and shoulder patterns. I'm aware of them. I know that if you look at a screen long enough, you can see them. But I do believe, and maybe you can help me out here. I do believe that certainly on the daily chart yesterday, that head and shoulder pattern just got thrown out the window. The neckline was broken on the way back down, and so on the daily, that's no longer a valid pattern to trade. Is that your take? Once that neckline gets broken on the way back, that pattern is null and void?
Yeah, you're right. I mean, I do the same thing. I don't trade head and shoulders. I just note them.
Yeah.
And then say, okay, that's additional support for my trade.
Yes, and so and maybe we'll get Rick from British Columbia. He's a head and shoulder guru, so he can teach us about that. But I do believe that neckline got busted yesterday all the way across the board, and you have to just kind of throw that pattern out. That pattern would have taken the S&P, the Dow, everything pretty much back up to the May 1st highs, but that thing got violated yesterday. It doesn't mean it can't get up there, but in my opinion, you can't use that pattern any longer. So you listen to us on KKNX out in Las Vegas. What time are we on out there?
1 p.m. Pacific.
Oh, that's great. Are we on for just 1 hour out there or for 2?
I just discovered your show last week.
Oh.
I heard you, and I never really checked that out. But if you're on longer, I'm going to listen to you.
Oh, that's great. Yeah, that's great. Yeah, well, we've been picked up by a number of stations across the country. We're just not sure, Business Talk Radio, we're just not sure which ones are being played and which ones aren't. But we absolutely do appreciate you listening to us. Tell 3 others out there. We'd appreciate that, and we'll look forward to you calling in again, Larry.
Well, I appreciate it. Let's do it again.
All righty. Take care.
Bye.
All right, folks, so you got the Dow up 52 points right now. And for Dave, I want to go over and take a look at the XLF. I know that my buddy Dave is inside the XLF trade, and if there was one of the sectors that I would play on a bounce, it would be the XLF. Why? Number one, yesterday, you had a downgrade come out on a bunch of banks, and you've had the XLF actually bounce up and trade higher. So you got bad news, and it is trading well. You also had a crossover of a couple of shorter-term moving averages out there. And if you take a look at the XLF yesterday, during the down thrust, pulling back with 72 million shares, really going into the B point of an A to B equals CD down that has 103 million shares. It got in there. It closed inside there. It is trying to get back up above that. So what you would be looking at, ideally today, if the market is going to bounce, if you were inside the XLF or the FAS or whichever, you're in the FAZ, here's what I can tell you to look at on both sides of that trade. If you're long, what you want to see is you want to see it get back in that March 16th area. The low there, 1440, you're trading at 1431 right now. You also want to see it get above this B point again. The high of the B point is 1433, because that's 103 million shares. That should act as support. And what you have there, if we do take a look at the B point, that 103 million shares, when you came through it, when you got through it, you did it with 64 million shares. So This is setting up a Tiger Gartley. It's setting up a real nice sell pattern. That sell pattern would come in right in around the 1497, ideally 1540-ish would be the ideal spot to be able to get a Gartley sell on this. That would be a 1 to 1.6. That would be really extended, but that is still the pattern that is out there. It's still doable when you take a look at the retracement, and this is true of the markets. When you take a look at the retracement, folks, off of the bottom we're talking about is June 4th up to the high that was put in on June the 11th. What you'll see is it was probably about a 50% retracement. Didn't even retrace all the way back to the 0.618 area. When you do that, if you just simply envision the way that you envision these retracements, the way that they're supposed to work. Suite 618 is absolutely normal. When you do a 618 retracement, it says that you're most likely on the A to B equals CD pattern. When it fulfills itself, it's most likely going to do a 1-to-1 pattern. That's 60% of the time. The other 40% of the time, it's going to do something more. Now, you get across a B point with the volume out there, that's going to give an indication that maybe it's going to do more than a 1-to-1, but that's going to give you a confirming 1-to-1. Now, what's the importance of understanding the retracement of your B to C leg? You just take a rubber band off of your desk, out of your drawer right now, and wrap that thing around your finger as tight as you possibly can. In fact, I got to make sure I have a rubber band in here so people can see the live demonstration. But when you back that thing off only 38% and you let it go, what happens is you've got a big push. You've got a lot of energy to push it its way up. That's why you'll do more than a 1-to-1 A to B equals CD the majority of the time. There's other elements that you need in order to become a master of that C to D leg out there. But in this case here, you'll back it off just maybe to the 50% range there. Let that rubber band go, and it's got energy, whereas if you backed it off to that 62% area, it has less energy. And it is really all about energy, folks. It's about your energy, my energy, and certainly the energy in the market. So that is on the XLF. That's what you would be looking for if you were. Now, the thing is, the XLF has been reshuffled around, so there's a number of stronger stocks in there versus some of the left side of this. So what you really have to do on the XLF is you have to go to the Spiders website, SPDR, and you can download the exact weighting structure and holdings in there as of last evening. And if you just take the top 10, probably just the top 6, but if you take the top 10 and go see what patterns are out there on those 10, whether they're A, B, C up patterns, and where the target is, whether it's got a thumbs up or thumbs down, that is what you really need to do, especially on the XLF. And then you need to go and take a look at the FAS or FAZ and see if that is now what the holdings are inside there. So that's on that sector. And even with the down thrust that we had yesterday across the board, all indexes, I'm talking New York Stock Exchange, S&P, Dow, everything, what you did have, and one of the short-term tools that I use out there is called the Summation Index, McClellan Oscillators Summation Index. And one of the oscillators was suggesting a pullback. I was looking for the market to just simply move sideways and pull back into my sledgehammer candle. That didn't work out exactly. But even with the down thrust yesterday, even with the 250-point move in the Dow, even with the move down in the New York Stock Exchange, the Summation Index still ticked up yesterday. That said, if you want to trade in the direction of the trend, it says the trend is still to the upside. Pretty amazing, even with a move down like we had yesterday. So it's just really about taking a look at the tools and what the tools are telling you. And when we talk about tools, folks, you need to have good tools in your box. Some of the best tools are Craftsman tools. And at TFNN, we've got Craftsman tools. You can take a look at the Tiger Dollar promotion. I believe that today, maybe it's this weekend, but I would take a look at it as today is your last day to be able to sign up for the program, because you're going to get to the weekend. You're not even going to be thinking about the market. You're going to be, spending some time maybe popping a brew. Oh, hey, congratulations to the Miami Heat out there. Winning their NBA title, and good news for LeBron James. No matter what you think about him, he set his mind to doing what he wanted to do. He got his outcome, and that's really what life is all about. So he got his outcome. We want you to be able to get your outcomes in life, and the easiest way to do that is always to invest in yourself. And so the best way to invest in yourself is take advantage of the special promotion that we have here at TFNN. We do it a few times a year. In this case here, go over to the homepage, check out the Tiger Dollar promotion. If you and you're going to make money on your money. So if you put 500 in, you get 600 credits. If you put 800 in, you're going to get 1,000. 1150, you're going to get 1,500. That's the deal, folks. And what comes with that is going to be 7 hours of trading, 7 hours of 7 hours of education. So beginning the week after July 4th, July 11th, that should be pretty easy, for a 90-minute session each Wednesday after that. One of the hosts here, the first one that's going to be kicked off is going to be by Larry. The second Wednesday is going to be Ken Shreve. I'll do the third Wednesday. Tom, I believe, is the following, and there's going to be hours of education that you absolutely want. It's like having books inside your library out there. So take advantage of that, folks. And that's at the homepage of TFNN.com. If we take a look at the markets out here, if we take a look at what's popping and what is dropping, popping to the upside, you got Harvest Natural up 75%. Must be a buyout out there. So who's buying Harvest Natural? To sell interest in their Venezuela. Oh, so they're selling their Venezuela interest for $725 million. What else do we have out here? Okay, they do have Harvest Natural Resources announces a share purchase agreement. So up 76% today. That's up $3 and change. IHS is up 2.5%. That's up $2. Google's up 2.25%. First Solar, FSLR, having a little dead cat bounce, up 10% this morning. You've got Ashland Inc., ASH, up a couple of percent. Universal Display, Panel. I think they got hammered a while ago. We'll go take a look at Panel. That's what's popping to the upside. To the downside, you got Ryder Systems down 10%. Ouch! They're taking a little hit this morning, down $4.49. 877-927-6648. Give us a call, folks. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. 877-927-6648. And Dow's up 62, S&P's up 5. Stay tuned today after this show. As we do each and every Friday, we do the Nadex Bull and Bear Hour. We'll visit with our man Daryl Martin, and following that show, you got Basil Chapman. We go up to Newton, Mass for 11 to 12, and then back here in Clearwater for Nico DeHaan. It's all about getting healthy today. And from 3 to 4, you've got the David White Band. David White Band doing the warm-up show for the Tom O'Brien Show from 4 to 6. And let's see, had a request from Susan. I mentioned earlier I wanted to really be able to thank each of you for ordering that free report. I'm going to do a special, certainly on July 4th. That way there will be something archived. Going to be taking a look at all kinds of mutual fund decisions that you guys are in as far as managing your longer-term accounts. I'm going to show you how to use the tool, how to set things up, give you everything that you need so that you can manage your long-term funds out there. Had a request that came in from Susan. She wanted to take a look at, somebody just do this one right now, BTTRX. Let me go see what that is out here, just so I can tell her. BTTRX. Actually have the chart on my screen. That is the whoops, I had it and I lost it. Why did I do it? It was American Century something. Probably a bond fund. Don't know why I lost the signal. Not a good thing. Okay, so I can't tell you what it is. That's not a good thing as I'm doing the show, because if I didn't get that, there we go. Okay, I'm back. Okay. I've lost the signal there for some reason. Okay, it's trading right now, and folks, what we're taking a look at longer term moving averages out here, and in this case here, you would be in this. You would stay inside this. Again, this is a way to be able to manage your longer term assets, your longer term money out there. So, and if you're not sure about that, go to the homepage at tfnn.com, order the free report. I gave you the information. And again, send me a list of those that you want me to take a look at. I'll have a whole pack of them that we'll be doing for the specials on July 4th. Let's continue. Let's go take a look at what's going on with some stocks out here. Let's go take a look at Ryder Systems. R is a symbol. They are down 11%, gapping down this morning, gapping down with volume, trading into the October 4th area. One by one, they keep falling. And where do they fall to? October 4th. Eventually, folks, our markets are going to be moving back to October 4th, and I'm now talking about the general market. So you got Ryder System taking out a swing point with volume and coming into the October 4th bullish engulfing candle with volume. On October 4th, when the markets really made a significant low out here, the last significant low, you were trading down at 37.51. On that day, you did 1.1 million shares. That's on October 4th. Today, Ryder System gaps down, been trading for 27 minutes, and you've done 917,000 shares. Ryder Systems is going to take out that October 4th swing point. That's a stinger. Let's go see what is below that. Let's go ahead and put this on a weekly chart, see what we have going on a weekly chart. Man, this thing is getting hammered. And so if it breaks the October 4th lows, By the way, that's $34.28, trading at $35.96. That is going to, let's see, here's the, okay. So the area of support, let me refresh this. Looks like the area of support that this is got, and it's trading inside there right now. So here's where it's really going. It's going back to February 5th, 2010, 9.9 million shares, low out there of 31.86. It's the high is there is 37.45. You're trading inside that. That's its last area of support. It breaks that, gets below 31.86. Then this little puppy, Rider Systems, wants to go back to the March 2009 lows, folks. Pretty interesting. Folks, thanks for being here. Have a great Friday. Have a great weekend. Stay tuned. The Nadex Bull and Bear Hour will be up next. Have a great day.